This just surprised me, man. I can't believe. Hello fellow investor, welcome to today's video. I'm going to show you something is very surprising that I've made a video before and I kind of make a mistake, and I'm going to show you this. It will blow your mind. Sometimes we might look at the things that are shiny, but sometimes you might overlook other things, and that's what I'm going to show you today. If you stick around, you're going to because it's the beginning of the year, and the beginning of the year there's always performance. You gotta look at the ETFs that you invest, all the investment that you invest. You gotta look which one has performed well, which one hasn't performed well, and your strategy is working. This is kind of things I'm going to talk about today. Here is a chart from Hamilton performance or enhanced income ETFs. So we have a bunch of ETFs here, and they actually posted the performance. So this performance, as you can see, we are starting. They categorize them. We start with enhanced income ETFs. So we can see HYLD. There's hdiv. We can see HYLD. Yield right now is 11%. And if you look at the since inception has returned -1. In this, bear in mind, this also includes the dividend that you have received. hdiv has done well, has returned about 9 and 55%. So even though it's 10% in yield, but has returned more in terms of overall return. But look at this one, HCall. I made a video before and I literally say you shouldn't. I mean, maybe HCall as in good, because of course you can buy HMAX, but surprisingly, it pays low. It only pays 7%, but return, for example, if you look at 1 month has returned 13%. If you look at the 3 months has returned 15%. If you look at 6 months, 9%. If you look at 1 year, return is 11%. 5 years has returned about 11%. But if you look since inception, that includes dividends and the return of capital, has returned about 16%. So that's a pretty good annually 16% return. This is this is really good. If you look at the HFIN, which also is Hamilton Enhanced Canadian Financials, which is one I also made that this we should buy because the performance was horrible, and we can see actually it has outperformed even the HYLD, but it's been around for a long time, and this actually is an ETF. Has returned about, for example, 1 year has returned 23%, but overall has only returned about 2%. And then Hamilton Enhanced Utility has returned about -12%. We know utility has been really bad, and right now it pays about 7%. If we go to financial sectors now, we can see HBA or Hamilton Australia Bank Equal Weight Index. These are index here. So you can see here, these ones here are enhanced ETF. I mean, they rather calls on them, and they put some of them have leverage a little bit to enhance that. That's what the word comes, enhanced, meaning it's an income but it's been enhanced. So there's some leverage on these ones, right? And there's a cover call on those stocks that they invest in. But when it comes to this one, is financial sector ETFs. These are purely index based. So they follow their index and designed by our team of financial sector specialists. And this is performance, of course, as of December 29, 2023. So that's performance from last year, because this year is just beginning, right? If we look at the performance of HBA, Australia has returned 17%. So even though it's only 5% in yield, this is very deceiving. That's what I said. Look at this, it's only 5%, but return is 17%. If we look at the HCA, which is Hamilton Canadian Bank Mean Reversion Index ETF, has returned about 15%. If we look at the HFG, which is Hamilton Global Financials, has returned 15%. If we look at Hamilton US Mid Cap Financials, return about 19%. So this is like a big winner here. We look at the HFT, which is Hamilton Financial Innovation, has returned about 1% because it's more volatile, and it doesn't pay as much because it is innovation, so it's designed for growth. But so far, this is a pretty new one, so the performance here is not going to be as great, but has only returned 1%. But if we look at the winner here is Hamilton US Mid Cap Financials, has returned about 19%. And if you look at the whole year, 3 months has returned 18%, 23 and 14 and 14 and 13. So it's a pretty good. So, but look at the yield, it's only 1.45. So this is deceiving. You might see the yield is 1.45, but end of the day you might be getting to something like hyld, which pays 11%, but your return overall is negative. Even though you receive those dividends, even if you are to reinvest the dividends, you're still getting lower. So if you are someone who really don't care much about the performance of the stock itself or the fund, maybe you might go with a high yield so you can get those dividends. But if you are investor who looking for long-term capital appreciation, I think these ETF for financial sector ETFs, which are not enhanced and they pay lower income, but the return overall is pretty good. That's it for today. And if it's the first time, just make sure to subscribe. And if you like this content, just make sure you give me a smash button. Thank you. Bye bye.